Great. Well, good morning to everyone. We're going to go ahead and get started now. I would like to welcome everyone to our first of two webinars on mobile banking with Malith Gunasekaram. This is Understated Fundamentals of Mobile and Branchless Banking. If you have any technical problems during the webinar, please do contact my colleague David Sheffick, either via email or via Skype. We do encourage you to participate fully throughout the webinar, and we'll be taking questions continuously through the via chat box on the right-hand side of the screen or through the questions box. I'll read them aloud to the facilitator to respond to. And as we have done with all of our previous webinars, they will be made available on our website, on our web community, and you can access them there. And we do have several more upcoming webinars as part of our ongoing series. So in April, we will have another session with Malith on Are You Ready to Implement mBanking? June, we'll have a session on opportunities and obstacles to mass small business credit scoring. July, credit analysis tools, and then in August, a session on problem loan management. All of our webinars are free of cost for our current SBBN institutional members, and we hope you can join us. You can access all of our forthcoming webinars and register at the website listed below. And as I mentioned, all of the completed webinars can be seen on our website as well. We encourage you to send out this webinar calendar to any of those from your institution who would benefit from watching these. And now I would like to introduce our very experienced facilitator, Malith Gunasekaram, an SBBN expert with over 28 years of information communication technology experience in 20+ countries across Asia, Eastern Europe, Middle East, and Africa. Malith is the technology advisor and managing director of CITR, an international technology consulting company providing specialized advisory services to facilitate technology innovations in developing and developed countries. And now I will turn it over to Malith.
Thank you very much. Good morning and good afternoon to everybody. I don't think anyone is in the time zone which is night, except for my colleagues in the US. It's early morning for them. We're going to discuss a very interesting topic. And what I plan to cover is what is branchless banking, which is relevant to most of you. The type of business models, how different countries have implemented different business models based on the regulations of that country and the requirements. The services that have been provided, some of the new services that these providers are planning to offer. The benefits, there's a lot of benefits as well as challenges here, because as we all know, most of these implementations have not reached scale. We could also talk about case studies, and at the end of the presentation we will take questions. So let me start. All of you know about traditional banking, so I'm not going to explain what traditional banking is. Branchless banking, what is branchless banking? This is something which is new. It's the current buzzword in the banking world. Everybody wants to get into branchless banking. So let me try and explain to in terms of what branchless banking and how it works. Now, the way I look at branchless banking from an IT perspective is that it's another delivery channel. It's like providing internet banking or debit credit cards or ATMs. But the difference here is it's been provided via the mobile phone in most cases. Mobile phones gives us access to clients in remote locations as well as locations that we don't have branches. The traditional transactions that are performed when branchless banking started was bill payments, that means utility bill payments and insurance, that type of revenue taxes, which have been added on in the recent past. Remittances between, I can transfer money to someone, my family, which is maybe miles away from my workplace, those type of facilities. Then also some new financial instruments like loan disbursements, loan repayments. Also in some parts of the world, savings is taking off, and also pre-approved loans. These are some of the products and services that are being offered. This platform is also used for government to people transactions. Now there are lots of these type of transactions in every country where there are social payments, pensions, emergency relief, especially when there are floods and earthquakes. They have used this platform to provide these services in a very short period of time. Agents, as you see in this slide, plays a major role. And agents are not bank employees, but certified and appointed by the bank to perform certain type of transactions. And they're also supposed to carry out certain KYC before certain transactions are done, or before accounts are opened. So they play a major role in this whole ecosystem, as we put it. And also they are going to be the face of your organization out there in the areas that your bank doesn't have branches. So this is in a nutshell explaining what branchless banking means. Now there are many definitions. People call it branchless banking, some people call it M-money, there is mobile financial services, digital financial services. There are lots of different type of definitions. But when you sit down and analyze most of these definitions, it amounts to providing financial transactions or financial payments over a mobile line or over a network, a payment network. So that's basically it. Let's move on. There is another term called Imani. Now, Imani is it can be implemented. I mean, a lot of people implement Imani purely because you can implement it very fast. It's a very simple payment transactions. Used for mainly to pay toll fees, train tickets, gaming, or e-commerce purchases. And usually the license are issued to telcos, and sometimes even financial institutions have got e-money licenses because they want to provide only certain type of transactions. Now, this can change from country to country. Now, in some countries, telcos, telecom service providers, are not allowed to perform branchless banking transactions purely because of the regulations. So what they do is they take e-money licenses and they provide these services. So as I said before, definitions will differ, the regulations will differ from countries to countries. If you really look at it, in most of the African countries, telcos do provide quite a number of banking services, which is not allowed or not performed in some other parts of the world, like in Asia, like in countries like Pakistan or Indonesia for that matter. So you need to try and identify the type of services that you want to provide your customers, and based on that, depending on the regulations, you need to apply for the right licenses and then start implementing it. Now, the way you implement, we will talk about it later, and actually in the next webinar later on. But I'll take you through the other steps that we need to look at before we implement branchless banking or e-money. First of all, I'd like to get an understanding. Jessica?
Yes. So we're going to do our first question for participation from the audience. So we'd like to hear from you if your institution is using any of these digital financial services. So we've now opened the poll, and we'll take about a minute to get some responses on whether you're using any branchless banking, any mobile banking, any e-money, or any agent banking services. So we've got a pretty diverse group today, and I know we have some institutions that are using some of these different services, so we'd love to hear from you on what you're currently using. And so we'll say open another 30 seconds or so here. And you can go ahead and click in for these. Great. We're going to go ahead and close the poll in 5 seconds. So if you haven't voted, now's the time. Okay, wonderful. So let's go ahead and close the poll. So about half of our users on today are not using any type of these services. We've got almost about 40% using mobile banking, and then a few institutions using the branchless banking. So a nice variety.
Yes.
And it looks like some of our institutions are using more than one, so that's something that we should consider as well.
Okay, so half the participants are not using any of these services. So what I'll do is I'll try and be more informative so that you probably try to grasp as much as more information as possible. Let's move on. Okay, I think one of the things that you need to try and understand is, or a decision has to be made, is that why use e-money and not branchless banking, or vice versa. Now, mobile network operators, they usually stick to e-money purely because they're not allowed to perform branchless banking services. And this may not be the case for institutions or mobile operators in Africa. If you look at M-Pesa, M-Pesa is a mobile network operator who provides a lot of services, including some of the banking services. So this definition may not be right for some institutions in Africa. But at the same time, you need to try and understand why you should use e-money or why you should use branchless banking. Now, some of the main differences between e-money and branchless banking are the KYC requirements. Now, e-money requests only limited KYC, but for branchless banking, usually they ask for full KYC. These are central bank regulations, and this may also differ from country to country. There's also a limit on the number of transactions that you can perform for a day or month. There are limits that have been put in. Also, there is a limit in the transaction amount. So you could provide only, you could transfer or do transactions, or you could cash out or cash in up to a certain amount. There are limitations, and these have been put in. These are anti-money laundering requirements, which differ from country to country. Now, if you also look at branchless banking, I mean, if you're going to offer banking services like savings or loan disbursements or loan repayments, obviously you need to do branchless banking. Now, when we talk about the models later on, there are many models that you can adopt or use to implement these systems, and you need to pick the right one, so that and within your means and based on your requirements, so that you could implement either of these systems successfully. I was talking about agents, and I said I will explain about agents later on. Now, agents are the face of your institution. Agents are not your employees. Agents are entities or a person who will act on behalf of the bank. And usually agents are appointed in locations where you don't have a branch, so that you could serve your clients in those areas. Now, agents can be appointed by mobile operators as well as branchless banking providers, and in some countries agents cannot provide services for multiple providers. You can only provide for one institution. If it's Bcash, it's only for Bcash, or if it's M-Pesa, it's only for M-Pesa. You can't work for different providers. But in some, I know that it's in some countries they do allow working for multiple providers, as well as third-party platform providers. Agents play a major role in providing services as well as building trust. They also provide a lot of other services. One of the key services is account opening, and this is where the KYC requirements come into play. Most of the agents, they'll have to get an ID number, make sure that the address is correct. So they usually ask for a bill, a water bill or an electricity bill, to ensure that that person is from that area. And they go through KYC. There's a defined set of requirements that have been put down by each of the institutions to make sure that those KYC requirements are met. So they usually go through KYC compliance. And agents are usually paid a commission based on the transactions that they perform. Cash in, cash out is important, and also one of the other challenges that we will talk about later is making sure that the agents have proper cash flow. Managing agents is a major challenge. We'll talk about that, how you retain agents and how you make sure that agents perform the right functions, so that where you avoid fraud and other issues that can come up. The type of business models, I said that I'll talk about. You get bank-led business models. In some countries, they allow only bank-led business models. Places like in Pakistan, even places like in Indonesia, branchless banking is allowed only to be provided by banks. Telcos can provide only limited services, mainly Imani type of services. Now, the telco-led model that we all talk about is M-Pesa in Kenya. We all know about it. It's one of the one of the largest mobile Imani implementations in the world. I like to also talk about the hybrid model which comes from Bcash, which is in Bangladesh. Now, this is a very, very interesting model. Bcash is reputed to be the fastest growing mobile branchless banking network in the world at the moment. They're growing very rapidly due to reasons. And the way it has been done is Bcash is a separate company, and their corresponding bank is BRAC Bank. So the back end is handled by BRAC Bank, which looks after compliance. But the Bcash itself, which has been set up, they operate more like an aggregator. They go out, they're completely focused on signing up customers and making sure that expanding their agent network. So it's a different model altogether. And I'm sure there will be other models that will emerge as we go along, purely because everybody is really interested in getting into branchless banking, because it looks like that's going to be the future. It's like everybody needs a mobile phone. It looks like everybody also will need a branchless banking account on their mobile phone. There was this survey that was done in Japan where there is extensive use of branchless banking or mobile banking. They asked this question: if you forget to take your phone or your wallet, what will you go back to when you leave home? And majority, I would say 98% said they will go back only for their phone, not for the wallet, purely because they could perform all the transactions from their phone, even paying for bus tickets or having a meal through your phone. So it's an interesting thing. Nobody thought about mobile phones a good 15 to 20 years ago, but today mobile phones is one thing that you can't live with. It looks like branchless banking or a mobile wallet is going to be the same in the future. Let's move on. Services. There are lots of services that can be carried out, but these are governed by mostly governed by the regulations of that country. The central bank or the monetary policy, whoever who defines monetary policy will say that these are the services that you can provide. Some of the exceptions are international remittances. In some countries they don't allow. Most of the services that I have listed here, they do allow. Some don't allow loans and repayments. Some don't allow savings, but most do allow most of these services that I have listed out here. Let's get on to the next question. Now, in branchless banking, we offer a lot of services. Now, can we ask everybody, what are the services that you think will help cross-sell products? Now, providing just payment services, you earn a fee from that service, and the agent earns a fee. But there are other services that most of these institutions are looking at cross-selling, so that this unit, the branchless banking unit, can be a profit center. So I'll open it to everybody to let us know what are the products that you think will help cross-sell products.
Great. So we would love for all of our participants to chime in here, and you can vote for more than one if you'd like. So we'll keep it open for about 15 or 20 more seconds. And we're starting to see some votes come in. And we'll stay open here for about 5 more seconds. Okay, great. We'll go ahead and close the poll.
Okay, it looks, this is a very interesting poll actually. To tell you the truth, I mean, every service that I have listed here can be used to cross-sell products. Let me give you an example. There's a wealth of knowledge or a wealth of data that all your financial institution has. Very few financial institutions has data warehousing functions to analyze the data that you have. If you analyze the data that you have, there's a lot of information that can be derived from them so that you could cross-sell. Let me give you an example. Most of you think that payment instruments for government programs cannot be used to cross-sell. Let me give you an example. G2P payments, a lot of people are given maybe $30 to $40 every quarter as a social payment, or it may be for mothers to feed the kids, things like that. And most of them, they do save. The way they do it is that as soon as you get a payment on your phone, they go to the nearest agent and they cash out all the money. And they take that money and keep it at home under the mattress. That's how poor people save, or the productive poor save. Now, if you go out and offer them a product saying that we will do this G2P payment on this date, if you keep this for a month, we will pay you so much of interest. If you keep it for 3 months, 2 months, it will be more, and in 3 months, it will be much greater. Now, before doing that, I think you need to do a survey and find out what they use this money for, whether they need the money immediately or whether they need the money to be kept to be paid to pay tuition fees, which falls due every second month, or they need to pay rent, which falls due every 3 months. So you need to first do a proper analysis, a survey, and then build products so that the users can make use of those products. And we have seen this happening in some markets. Another good example is cash deposits or withdrawals. If you see a trend of cash deposits coming in at a specific time of the day, every Thursday we see that $50 is deposited into an account, or every day there's a $10 deposit which comes in. What you could do is you could go talk to this client and ask them, why do you save $10 every day? They might say, I have a small shop and this is the daily collection. I like to save it every day. Now, you could talk to them. You can see that this person is credit worthy. I mean, every day he saves $10. Why not offer him a product? Go ask him for his, what else do you need? I mean, do you want to expand your business? Do you want to expand, I mean, this person may be selling fish or vegetables. If you open a bigger shop, do you think you can make more money? For that, you need a loan. So you could straight off go and, sell a product, cross-sell a different product. So there's a wealth of knowledge, there's a wealth of information that can be derived from M-payments or M-banking or digital financial services. And you could use it to cross-sell products. And that would really bring benefits to your institutions. Just doing M-money or branchless banking, you do make money from services fee, but one of the most important things that you need to try and understand is that by doing this, providing this service, you do get what you call a float in banking terms that can be put to good use by on lending or providing other services. So think about branchless banking or Imani or digital financial services as an area that you could really make it a profit center for your institution. Let's move on. There are some services that telcos can't provide. As I mentioned, overseas remittances, savings, they can't give loans. There are limited cash transfers. And also, obviously, it cannot get linked directly to a bank account unless it's been authorized by the central bank of that country or by regulations. Benefits. Obviously, there are lots of benefits, and that's the reason there are more than 150 digital financial service implementations in the world. One of the things I like to take some time talking about profitability. Profitability it's a key area that all your institutions should look at, purely because you lower the transaction cost. You don't need to open a branch in an area, and as you know how much it's going to cost you to open a branch. A branch can cost, and also it's not only opening the branch, then there is recurring expenditure. Every month in, month out, you're going to spend money. So you should try and see the benefit of having an agent against having multiple agents against having a branch in a specific area. Initial experience shows that you can save about 80% of your cost if you don't open a branch and have agents. So this is one area that you should really look at. Also, in terms of profitability, you can get low cost savings or deposits by providing this service. If you go and borrow from another institution, you know how much that you need to pay, and then you know what's going to be your spread, which is going to be limited. But if you get into, if you can have access to low cost funds by providing this service, why not? Because your profitability figures are going to be much higher. Let me move on. Branches, digital financial services are provided, and a lot of the countries, a lot of the governments want to try and implement or encourage institutions to provide these services purely because they can service the unbanked. Let me give you an example. I mean, I did quite a bit of work in Indonesia. It has a huge population. I mean, 220 million people. And there are 18,000 islands, but 14,000 at high tide. About 4,000 islands go underwater at high tide. So there are 14,000 islands, and there are lots of people who move from island to island to provide services. And they use informal means to transfer money from where they work to their families. They use ferries, they use buses, they use different people. There are even couriers who carry money from one island to another. Access to finance is very low. Only 40% is bank. But the best part is there are 240 million mobile lines and a population of 220 million people. So that means there are people who have more than one telephone. And even among the poor, when we did surveys, we found that there's at least one telephone at home of all these poor people. So either the son or the husband or the wife, they have at least one phone. So it's obviously a very good way of accessing these people. And the best part is everybody uses cash. So in a cash society, there are challenges, how you can move cash to E. These are challenges, but it can be done. So this is a very positive or this is a major benefit of accessing the unbanked. What you need to do is set up a mobile platform, give them wallets, and teach them how to do it, and make sure that there are agents so that they can do cash in, cash out. The focus, I have a feeling, is going to be the savings in the future, and definitely the retail supply chain transactions. Like most of these people will have small shops which sells Coca-Cola or milk food or cigarettes, and they all deal in cash. And going back to the distributor, there will be benefits if you can computerize that whole supply chain. Banks can do it by working with distributors, and we see a lot of these banks in most of these countries are moving towards working with distributors so that they can tap into this market and also tap into this chain. Benefits to the customers: it's convenient, affordable, reliable, and secure. You don't need to go to the bank. You can carry out all the transactions from wherever you are. It's secure purely because it's password protected. Some are even trying to use fingerprints. I have seen some research that has been done to use fingerprints to authenticate transactions. It's going to be as convenient as using an ATM, but here the difference is you have the mobile phone in your hand. So there are lots of benefits to the customers. Overall benefits: basically you're secured purely because you're looking at your interest is being looked after by the central bank, because there's proper KYC, there's proper compliance. They ensure that those compliance is there. Even for the staff, for the banking staff, it's secure. I can give you good examples, especially in high security, high risk countries. It can be even in Africa or in Afghanistan or in Pakistan. You can't open branches in rural high security risk areas because the banks are robbed. So what you could do is you have an agent with limited cash flow functions, and then you could provide services and access those so that your staff is not, there's no risk for your staff of transporting cash and stuff like that. Improved transparency for sure, because all the transactions can be tracked, all the transactions can be audited, so that there won't be leakages. Also, there are a lot of AML functions that have been put in place, which can be controlled by the system itself, so that you could control the number of transactions that have been done, and as well as the transaction amount. So overall, there are lots of benefits. Let's move on to challenges. The most frightening one is the first item on this slide. Only about 10%, 10 out of the 150 implementation worldwide are successful. When I say successful, I'm talking about profitability. Have they gone over the tipping point where it makes more money than their cost? Now, one thing that you need to understand is that the institution that I worked with in the past, we did a survey to find out why is only 10 out of 150 has been successful, and there are lots of reasons. One of the main reasons is that you need to build a strategy before you start looking at this. You need to look at all the options. You need to look at what best works for you. What are the products that you need to offer? Are you going to offer these services to a small population? If your country is small that you come from, and it has only 1 million people, if I spend $1 million to build this, is it going to pay it back, or how long does it take to pay it back? Or do you think I should work with a mobile operator so that he has already built a network? I can offer some services, not all the banking services, but some services. So these are some of the questions that you need to first get some answers and then move on. One of the things that I tell all the institutions that I have worked in the past, or even this audience, is that you can't copy another implementation. There are no best practices in mobile financial services. or branchless banking implementation. What I say is learn from other people's experiences. There are examples that some of the models in Africa has been copied and tried to be implemented in Eastern Europe as well as in Asia. And I know there are some institutions that have lost millions of dollars purely because you just can't copy or you can't replicate other models. You need to build your own model, and it's important that you develop your strategy, right? Now, a lot of people think that technology is the big deal. I'm a technology person. I have been part of building strategies and implementation. Believe me, technology is only 25% of the problem. Just 25%. The other 75% is a lot to do with the strategy, a lot to do with building your agent network, the right products, marketing awareness, literacy. The list is long. Technology is not the most important factor in this whole implementation. Technology is important to make sure that you have got the right products, the right services, the right support, the right security. Those things are important. But there are other things that you need to look at. I think I covered most of the areas in terms of the challenges. Targeted marketing and scale is also important. Credibility of your agents. Also, you need to try and target specific market segments. A country that I worked, we were looking at the cocoa farmers, specifically looking at the cocoa farmers and their needs. In another country, I looked at the fisheries sector, the fishermen, how they could sell their catch and whether that supply chain can be profitable for the fishermen. So there are, depending on the country, depending on the terrain that you're working, you need to make sure that what is best for you, what is the profile of the client that you're going to be. Whom do you think you should provide this service? So these are some of the challenges. Right? Trust is really important. You set up this system, and if it doesn't work, or if the transactions are lost, nobody's going to use your system. So make sure it is tested for an extended period of time to ensure that these, your system or your platform or your agents, they know exactly what they're doing. It's not only just that. There are a lot of back office functions. You need to make sure that your support infrastructure is in place. It's like setting up an ATM network. You need 24/7 support. So all that stuff is also important. Training agents, this is a huge area. I have seen agents dropping off than signing up agents in some markets. There are lots of reasons. Agents are not going to be agent if there are not enough transactions, and if the agent can't use that model to do other transactions or to be profitable or to make money. So you have to make sure that while scaling, you need to train your agents to make sure that they provide the right services. Trust is also one of the important things, and also you need to have proper budgets for marketing. And now marketing, there are different ways that you could do marketing, above the line as well as below the line. Sometimes in some markets I have seen focus group meetings, specific targeted marketing works better than having an ad in the TV saying that we provide branchless banking services, because people who watch TV, their IT or their technology literacy levels may be different from the people out there in the rural area. So you need to try and get the right message across, especially when it comes to marketing. Let's talk about case study. How are we for time?
Malith, yes, we're actually running a bit into the discussion section, so I would suggest if we have quite a lot of information on the case studies, so if you want to talk very briefly about one of the three, and then I would encourage our participants to review these case studies once we put the webinar up on our website, just so we can move into our discussion period.
Great. Shall we talk about Pakistan, UBL Omni? I'd like to talk about UBL Omni specifically, purely because Pakistan is a country that everybody had big question marks whether it's going to work, whether digital financial services was going to work or not. This was one of the biggest questions that everybody had. And at the beginning, there were only 3 providers, EasyPaisa, UBL Omni, and one more. And what the government did was that when there were natural disasters, they wanted G2P payments to be done through using these platforms. And by using these platforms, they managed to serve the affected people within a very, very short period of time. It was something like within a week or something. And all the mobile operators got involved. And they managed to provide these services to everybody. And that was a good start. That was a good beginning, where even illiterate people who could use the mobile phone, they started performing transactions. What they did was even the screens on the phone, they didn't have it. They didn't have letters. They had objects or images so that people could recognize. What they say is, press this if you want to transfer, press that if you want to encash, cash in cash, or stuff like that. So purely because if you look at the literacy levels were pretty low. It was like 30%. And only about 12% of the Pakistanis had formal banking accounts. So today, if you really look at, I mean, after a good between 5 to 10 years, you can see that in Pakistan, almost all the banks offer digital financial services to their customers. And they want to expand their business, especially to the high security areas and the areas that cannot be accessed, which has mobile coverage. And this has been a big success. EasyPaisa is a big success in the world. UBL Omni has the largest agent network in Pakistan. And these are some of the reasons that it was successful. I mean, one of the main reasons that I want to talk about this was purely because the model, the requirement, the need was very different to most other countries. And they build their networks from scratch. Now, the State Bank of Pakistan is a very, I would say, progressive central bank. The regulations came after some of these payment platforms were implemented, but they ensured that proper KYC and proper account opening functions are carried out by everybody. Now, there's another unique thing that has been done in this country is that before you open an account, there is this central database called NADRA, which has everybody's, about 80 million Pakistanis or more, their information, including fingerprints. So before you open a bank account, you need to carry out full KYC, and you need to do another verification, and you could do a fingerprint verification before account is open. That gives everybody, the banking industry, the people, the security as well as the trust that this is very well managed and governed. I'm not saying that there had not been frauds. Every system has frauds, every system has leakages, but overall their performance has been pretty good. So this is one of the case studies that I want to talk about. I also want to talk about the next session, some of the steps that you need to start thinking before you start implementation. As I said, I will talk about this in detail at the next session. Strategy for me is key. Strategy breaks down into researching about your customer needs, about your market. You look at your branchless banking regulations, you look at your agent network, who is available, whom can you work with. Can I work with a milk food supplier who has agents all over the country, or whether it should be the cigarette seller? You need to look at those things. You need to look at how do we bring in digital financial service literacy to the people, which is a very expensive part of the marketing budget. Market awareness, how do you set up your back office functions? How do we go forward with branchless banking implementation? So these are some of the things that you may have to start thinking. We will discuss this the next webinar. In summary, what I want to try and do is, what I want to tell you is digital financial services is another delivery channel. For banking institutions, you need to start looking at it as a delivery channel. A delivery channel that you have to implement whether you like it or not in the future. I say this purely because if you look at ATM networks, some of the banks had to implement ATM networks purely because that's the only way you could stay competitive with other banks. In places like Pakistan, you have to implement mobile banking or branchless banking. Without that, you can't survive, purely because all the other banks are offering those services. So you need to try and come up with a model how you should implement this the most cost-effective way. As I said, strategy is important. And please learn from other implementations. Read and learn from other implementations before you go forward. As I say, I mean, there are no best practices in digital financial services. So that is my last slide. Thank you very much for your attention. So let's take questions. Jessica.
Great. Thank you so much. And we have a couple institutions, a few of our members have been very successful in implementing some of the digital financial services that you've mentioned. And I'm actually going to turn it over to Collins from Chase Bank in Kenya. If you want to share a little bit about some of the successes that your institution has had in implementing your mobile program.
Can you all hear me?
Yes, thank you.
Yeah, wonderful.
Yes, we do.
Okay, good. Well, Kenya market, I mean, as Malith has mentioned, we have one big telco called Safaricom through M-Pesa. This happened about 10 years ago. You know, the market, as bankers, watched and thought, okay, this is a new idea to the market. Let's see how it plays out. And quickly, it became such a big force that, you know, for the banks, we had to move into, you know, playing in the space of mobile operations. So quickly, we came into, you know, set up applications, you know, mobile applications, or actually riding on the platforms of the telcos, or was it vice versa? We're using our internal systems, connecting them into the telco, where, you know, a client can actually be able to access funds from their bank account into the what you now call the mobile wallet, or, you know, you could say a float, M-Pesa float. Because what was happening is banks quickly realized that, hey, look, we are losing a lot of deposits because they leave, because, you know, M-Pesa became, you know, what you might call a way of life, because you're paying bills through the same, you know, you're buying. Malith talked about, you're looking at the future where, you know, you'd use distributors, you'd use telcos. Well, in Kenya, it's already happening. So banks really had to quickly come in and say, okay, look, we have to play in this space, you know. And right now, as Chase Bank, what we are doing is we already have a mobile application in place, together with a USSD code. that can actually help our clients open accounts. I mean, I'm talking about clients who have both smartphones and your 2G phones. You know, we have what you call like a star 275 hash. You log into it, able to be guided accordingly so far as opening accounts, checking your account balance, because you've linked it up right now, making bills straight from your account, to the service providers. You talk about airtime top-ups, we're able to do that. Of course, getting back into the M-Pesa, we have other telcos as well, but M-Pesa is big, so our app is able to link you up to them. You talk about buying insurance, cards, you talk about credit cards, you're able to apply them through your mobile, even going as far as buying unit trusts. Well, getting to our contact centers bank as well, you can use the same mobile application, and even check deposits. So as a bank, we have embraced that, and SMEs together with individual, that's retail accounts, are using this aggressively. For us, it's just a simple case of, look, this is what the market is talking to us, because when you talk about internet connectivity, it didn't come in as fast as mobile application, pretty much as the Pakistani case. I know in very developed countries, maybe you're talking about a lot of internet banking application, but where we are right now, it's more all about mobile banking because of the reach that it has. And yes, telcos are really a big participation in the same. Back to you, Jessica.
Great. Thank you, Colin, so much. I think what you had mentioned was very important in that the market was very ready for mobile banking, and there was the participation from the telcos, and so in order to be aggressive in this market, your bank needed to create some products in order to access this market. So thank you so much for sharing. That's wonderful.
You're welcome. You're welcome.
Great. I would like to have Bernadette speak from Tanzanian Postal Bank. David, are you able to help me unmute her? And while we do that, we do have some questions coming in that are relevant. So one of our questions specifically on that comment was institutions that have successfully implemented mobile banking, do they have any mobile phone preferences? Are they exclusive to smartphones, or can we also have basic phones and text phones, just the sort of 2G phones? So Malith, you may want to answer that as well.
Yeah. Now, the type of phone is a good question, purely because different markets will be using different type of phones. Now, I'll give you a good example, is that it all depends on what market segment are you going, are you targeting. If you're targeting the poor and the unbanked, they won't have smartphones. They will have the normal basic Nokia or Samsung or whatever phone. And you need to write applications, or you need to provide services that supports those type of phones. Now, if you're offering these type of services to the middle income or the rich, obviously you can have smartphones. But the way the market is moving, if you really look at the development of mobile phones, even most of the basic phones will be providing these smartphone functions in the future. So I don't think that's going to be an issue in the future, but the way I look at it is the type of phone that you're going to provide the services will purely depend on your customer. Who is the customer that you're looking at? Are you looking at the unbanked? If you're looking at the unbanked, go with a basic phone. It has to support a basic phone. To places like in Indonesia or in Pakistan, the strategy is to go for the basic phone.
One of our other participants from an Asian bank is chiming in that, even customers and clients that have smartphones don't often have the data package, or the data coverage may not even be there for a smartphone. So I think it is very dependent on the technology that's available within the market that you're working in. So thanks so much for sharing there. And we do have a question in terms of some of the best agent banks as well. So another institution is asking, can pawn shops be agent bankers, remittance centers? Maybe you can share for us, Malith, whether or not these would make good agent bank centers and some other facilities that may work as well.
Sure. I mean, pawn shop can be agents. I know there is a specific bank is looking at a large pawn shop chain to be their agent. So what they do is they appoint them as super agents, train their staff, so that they could provide these services and make a commission on those transactions, purely because also they have access to cash. Pawn shops are usually secured. They do have cash, so cash in, cash out is not going to be an issue, because managing agents, one of the key areas to focus is cash flow. So pawn shops makes a good, it can be a very good option. There are other agents that some of the institutions have been looking at. I mean, like the smaller 7-Eleven type of supermarkets, the smaller ones. There are in places like in Indonesia, the cigarette vendors are everywhere. So they all want to look at those vendors to be the agents. But you have to be, the way I look at it is that you need to be careful how you choose your agents. You can have super agents. That means a chain shop that can be made as a super agent, or you need to go and recruit agents in that specific area. One experience that I had was that a bank went and recruited agents right in front of a bus stand, the main bus stand of that village. So basically the question was that why do you go into that specific shop than going to something else? What they said was, look, everybody who comes to this bus stand, they go to this shop to have a meal. So if I get this person as the agent, that person will be a good agent who can provide a service, than having a shop which is somewhere away from the bus stand. So this is ground knowledge that you need to look at and make sure that those you recruit the right agents. I hope I answered the question.
Yeah, very, very, very helpful there. Thanks so much. So I think we had a follow-up question then in terms of the prospects for USSD and telco's role in mBanking with regard to mobile apps growth. So maybe you could talk a little bit about that. So iOS, Android, and their wide accessibility of smartphones.
The USSD code is going to be there. I mean, most of them use the USSD code to get onto a specific screen offered by either by the telco or by a bank. Development, mobile app development, which I have a little bit of experience, is that it's a bit of a challenge if you were to develop it for Android or for iPhones, because the technology used is different. So that has been a challenge, and I hope these things will be addressed in the future, where you could use maybe a common technology or a operating system or a platform or whatever that you call it, that you could use it. Just like some of the telcos have come up with interoperability. Telcos in the world are trying to be interoperable so that M transactions can be performed, going from one wallet to another wallet of another telco. Just like that, in the future, I reckon that phones, irrespective of what the phone is, you should be able to carry out transactions, and you should be able to download the same app. That's the way I see it.
Great. We're going to take our final question, and it's in terms of profitability. So we actually have two questions on this topic, and so maybe you can kind of give us a broad answer here on this. But the kind of general question is, you know, what's the least amount of subscribers that a bank should have in order to be successful and profitable? You know, and also in some smaller countries where it's harder to get this high volume of transactions, you know, what are some good models to become profitable and to get to scale?
Now this is a
and might
very,
shared
very
platforms be a good way to go?
Yeah, this is a very important question. I mean, that's the reason I always talk about strategy. When you develop a strategy, you will be doing your budgets also. You're doing your financial projections also. And you're doing your costing and your pricing. Now, in one market, being profitable in one market doesn't mean that, I mean, in one market, having 1 million customers may bring you to profitability. But in another market, 1 million customers may not be good enough, purely because they're only doing cash in, cash out transactions, or they're doing only payment transactions. So coming back, strategy is again important. You need to do your numbers in terms of developing a proper budget. That's where you will know what is the tipping point. Some years ago, we did some analysis, and we call this we drew this graph where when you start the implementation, you have a graph which is not a positive graph, but it's a negative graph which goes on for a while. And one axis is the time period, and the other axis is the money, the amount of money that you spend. And it's always in the negative until you hit a certain number of transactions, which has to be calculated. Now, in some countries, that tipping point was G2P transactions. In some countries, it was payments. So I think for each of the institutions, depending on your strategy, you need to try and come up with a proper a model, a business model and a financial model, which comes out with the right numbers to say that, okay, only after we achieve this level of transactions that we will be profitable. And also, you need to make sure that the period of achieving this is shorter, as much as possible. Now, the shortest, the fastest growing mobile money network or digital financial service network was Bcash. They turned around within, I think it was 14 months, if I'm not mistaken. So that's the type of numbers that you should look at. It can be shorter for different markets. And it all depends on the amount of capital expenditure that you will incur. That's the reason people keep saying, don't build your own network, share networks. And that's happening big time.
Share network.
Yeah, or work with a mobile provider who already has a network, and work with the regulator to allow them to be the front end, because some of the regulators may not allow them to be the front end in some markets. So
great. That's very, very helpful. And I think these are some of the issues that we will be covering in the second of this webinar series as well. So we are running very short on time, but I would like to have Bernadette Gogadi speak from Tanzania Postal Bank, and she will share a little bit about some of the successes that her institution has had, and share how they implemented their mobile banking as well.
Oh, hi everybody.
Hi Bernadette.
Yeah, sorry, I came in late, so I'm not sure what has been discussed before. But what I'll share with you is how we managed to introduce our mobile banking should I say, product. As I told you, Jessica, that we had this mission in our bank to serve the poor. So, and already the market in Tanzania, which is financially included, or they have formal financial services, were by then 12%. Though now they have increased up to 20% now because of the MNOs and the agency banking, it has increased. But at the same time, we had no money to establish branches in all the places where we wanted to extend our services. So the issue of cost was also of essence. That's why we had to look for software that can enable us to reach the poor, and majority are in the rural areas. Also, we had results from research which was conducted by FinScope, and among the reasons that were cited for people not having accounts was the issue of proximity. So with that software that we would have had should also address this issue of proximity. So mobile banking was the answer to this. And also the issue, people were in the rural villages actually, the issue of KYC, because the KYC issue, it doesn't segregate the educated or the illiterate town dwellers and the rural dwellers. It cuts across the whole population. So we had to have to address this issue of KYC to our customers so that they can be able to open accounts. So mobile banking was the solution by then that could enable us to reach the rural areas. Now we have mobile banking plus POS, the point of sale devices, which now the two we can operate through the agents. Now the agents to us, there are several. We have the SACCOs, we have the MNO agents, those who are selling Vodacom for M-Pesa, Tigo for Tigo Pesa, Airtel for Airtel Money. All these now are our agents to offer our services. We also have village savings groups. We have shops, the shops in our township, and we have the Tanzania Post Corporation, who, since Tanzania Post Bank inception, they were our agents. So they also give us that outreach. Our outreach, actually, I can say, with these agents, so far, we are up to the level of townships, because that's where we find it is viable to have these agents. Also, the agents can have a number of customers who can transact with them. Otherwise, we are yet to go deep into the rural where the population is sparsely populated, to be precise. That maybe the strategy there could be different. We are not yet there, though. Yeah.
Great.
I don't
well,
know.
Thank you so much.
Yeah.
Yes. No, I think that's very helpful for us. We had done a poll earlier, and about 50% of the participants have not yet implemented any digital financial services or mobile banking. So it's great to hear about some of the success stories, and for these institutions to begin thinking about their own strategy. As Malith had suggested, you can't take the success of M-Pesa, for example, and just move it into every other country. So it's important to develop a very specific strategy to the country and the market that you're in. So again, we would like to thank everyone so much for joining us today, and we will delve deeper into some of these topics in our next webinar. And if there are unanswered questions, please do feel free to contact me or Malith individually, and we're happy to answer any of those questions. And you can also post questions directly on our website, and Malith and I can go to the website to answer those as well. So again, we'd like to thank everyone for joining, and we hope to see you at our webinar, the second of this series, on April 10th.